Now, this is the opposite of the topic called stock split. And what we always call this is the reverse stock splits, and this usually happens for stocks which are at very low price. And people who trade penny stocks will sometimes they encounter this event. And people who actually invest in strong fundamental stocks, you will hardly ever come across this event. So now first thing is that what happens during reverse stock split? And if you're already invested in this stock called Nowen, let's say for around this area, and suddenly one day you wake up and then you see your P&L suddenly jumps about 1,000 times or 10 times or 1,000% in your P&L. So now the thing is that whenever there's this reverse stock split, and this is the event where we encounter about 1 to 10, the split, or 10 to 1 actually, 10 to 1 means 10 slices of shares becomes 1. So that means here the price from the price here you would see about an increase for about here, I mean around this area you would see 80 cents increase all the way to $8, right, for about 10 times. And of course we can't be too happy about this. Although there will be a long huge candle, and this is only for temporary. So if you have captured this screenshot, keep it. You might never come across to this all the time. It's very rare. All right. So very rare means very rare for you to capture this, because the next day this will be adjusted. All right. So now the next day, like I said, it will be adjusted, and like I said, it was earlier 80 cents right here, and it's adjusted to $8 per share. So, and this company has announced that there was a 1 for 10 reverse stock split, and you can always click on this button, or sorry, this symbol right here, icon, that it shows you 1 to 10 reverse stock split at 26th of May. So of course, then the second thing is you might see some of these stocks that has a lot of splits over a long period of time, right here. And this is just a stock that's around 6 years, listed for 6 years, and it has done about 5 reverse splits. And the reverse split numbers were very huge. So every time it does a reverse split, there will be adjusted stock price. So you can see the initial public offering price becomes about even up to 2.7 million in this case. Alright, so I don't find it surprising, but if you are not aware of this event, you will find it surprising, and then you might say, hey, this guy, this company even was priced higher than Berkshire Hathaway. Alright, so as Berkshire Hathaway, it's around 300,000 per share, right, for the past few months, I believe. And okay, so it's like gluing all the slices of a pie together, merging all the slices into one, and it doesn't change the size. So if you look at the equation, and if you look at the equation here, then you can see this is $10 per share before reverse stock split, and if it's like this is 1 for 10 reverse stock split, so the price would be multiplied 10 times, but the outstanding shares will be reduced 10 times. All right, so this is reduced by 10 times, and of course what is not actually change is actually the market cap. There's no change in the size like we saw in the pie just now. So pretty straightforward. And why they do these companies, they want to do reverse stock split is this is mostly they want to avoid listing from well-established exchanges like NYSE. If it is below USD 1 per share, that is considered a penny stock. So, and the listed stocks, they go to OTC counters, and of course you might see many penny stocks are trading in OTC. So a lot of public investors, they view penny stocks as a stock that does not have a lot of inherent value. So it's usually poor fundamental stocks, and they consistently lose money for a long amount of years right here. So right here, what we can see, okay, there's some revenues here, but it's pretty flat. And what you can see is the net income and the cash from operation has been negative for a long time. Right. So then, so of course, well, of course, there's a cutout here that says that NYSE stocks must maintain a minimum price at least $1 per share. All right. So now let's move to the next one. Then Nasdaq. So Nasdaq slightly different, about $3 per share minimum bidding price. So of course there are a whole list of other requirements, but this is actually one of that. So if a company is doing poorly, you might see a lot of split events, maybe once per year, or once in every 2 years to come. So usually these are the stocks that I do not want to invest for long term, and this spells bearishness most of the time. It's actually the opposite of a stock split. Whenever you have stock split because of the price has gone up a lot, and because it's very bullish for the longer term, and that's why a company chooses to go for stock split. But this is the opposite. This is when you have the price of the stock keeps falling because of fundamentals, and they want to buy themselves some time to avoid from delisting. They have to do the reverse stock split to look like they still have some kind of value, giving an impression to investors that this gives out some impression that it has some value. Because low price stocks, usually cheap stocks, are usually viewed by investors. They do not actually have strong fundamentals, right? So, yep. I hope you enjoyed this video, and happy trading and investing. Striker X here, signing out.